All right, there we go. So welcome to Trading Coach's Corner. Get this share with you guys here. There we go. So we're good and ready. All right, so coming to you live from my log cabin in the woods, literally a log cabin that I got here. Um, anyway, it's my house. But I want to welcome everybody to Trading Coach's Playbook for this Friday. And welcome. My name is Brandon Wendell. If you haven't figured it out, it's on the screen there too, so you can see. And basically, we're going to go ahead and talk about the markets, and I'm going to focus on the volume effect today. That's what I chose as my subject. And basically, when we take a look at the markets, we're looking at it from an educational standpoint. I'm not telling you to buy, sell, or hold anything, or give any personalized recommendations about the markets. All markets do involve the risk of loss. This is always a situation. No matter what we do, we can never eliminate the risk. We just try to minimize and manage it. And I'm also not subject to trading restrictions, so we can have a position in a security or initiate one at any time. And let's see here. Just want to open up a couple things here. I'm involved in a lot of programs here at Wealth Builders HQ. And one of the main ones that I'm involved in very actively is the E-mini think tank, where we basically get together and we find opportunities in the markets. We identify there's education mixed with practical application, which is a great thing. And of course, not every trade works out. Basically, I start off every program when we meet Mondays, Wednesdays, and Thursdays from 9 a.m. to 11 a.m. And if you can't make it live, everything is recorded. And actually what happens is this. Let me just show you that I have one. Open. Sorry. Think tank. Where are you? There you go. 9-5 trading ideas. It's the most recent one. So what I do is I put out a bunch of trading ideas, and there's a bunch of rules included in that. So again, this was from the 5th, from yesterday, as a matter of fact. And I even have education there. We're talking about why we would cancel a particular trade idea, how I design the charts and what I use. And then these are some of the trade ideas that we identified. I identify them prior to the class, and then I present them and email them to the students. So we then go and we practice our trading on these strategies and using what we learned in the E-mini Think Tank program, because it's a mix, I said, of education and practical application. We get to apply it and learn how to trade properly. So one of the really nice ones yesterday, as a matter of fact, was there was two, one for the 4th, which isn't here. That was a short on the NASDAQ. And then here you see we shorted the Dow. And actually that one ended up getting stopped out for a win. I think I was just looking at that chart. Yeah, there it is. And you can see that I had initially identified a channel. And this is what happened when we got into class. This is what we were looking at, basically. Price was entering into a sideways channel, and we talked about the rules regarding that and how we would possibly trade that. And then it broke the channel. You can see I ended up shorting on the retests of that channel. We used our rules to identify a stop as well. And then target number 1 was achieved almost immediately. It was pretty quick. That was about 11 a.m. So the class went from 9 a.m. to 11 a.m. You see the breakout was at 9 a.m. The entry was a little bit later at 10. An hour later, we had a nice profit. And that was, from 41,000 down to 40,800 roughly. So you're talking about 300 plus points on the Dow. And then the second contract, unfortunately, got stopped out on a trailing stop, but it did actually end up going to target 2 after it retested that same area, and could have been a different trade, but that's the way it works. So I identify these opportunities and I teach these opportunities, and then we practice it, as I mentioned. So let me go. Sorry, things are running a little slow here on my computer because I have too many things open, I think. That's why. Here's another one. This was on the NASDAQ from the 4th. Well, we identified it on the 4th, couldn't enter. As a matter of fact, I can show you. I go back to file open. There were 2 trades. One was on the 4th, and the other one was supposed to be for the I'm sorry, it was both on the 4th. One was the NASDAQ, the other was the ES. And unfortunately, the ES never hit supply. So here it is again. ES missed the zone. NASDAQ, that opened. And I don't think it hit our target yet. Let's take a look. 18,803. Oh, it did. It actually hit the target. So that was right here, 18,803.75. And target 2 is 18,281, which it's not gotten to yet, but it is on its way. So there was actually a daily demand where we paused. So there's some great opportunities that we identify in this E-mini think tank. And like I said, not every single one of them is a winner. The other thing that I also do is, again, it's all about education and learning how to do this. So when I present these opportunities, for instance, the Dow, I also, as you can see, have pictures of the trade ideas, and I explain why it is that I acknowledge that this might have been a trade idea and how we might actually employ that. So you can see that was the trade setup, the way it looked at the time. So it's a great way for you to learn how to utilize what it is that I teach in the markets. And that's what we're going to get into today, a little bit of education on volume, which is actually misunderstood quite a bit. I was talking about this last night. I did a Q&A session for another program I teach, and somebody was asking a great question about volume. And I want to go back and kind of answer a little bit about that and talk a little bit about that. So as I said before, we do pretty well. This was the month of August. I was actually off for a lot of August. We didn't have as much trading activity. I also started off pretty badly. As you can see, I was only right 48% of the time. We had a lot of losers compared to winners. Well, not a lot, 15 losers, 14 winners. But here's the key thing. This is why trading works. You don't have to be right all the time. You just have to be wrong very little. The average loss last month was $500. The average win was double that. And most of the time, I want to keep it even better. I want to keep it like a 3-to-1 type of reward risk ratio. It's not always possible, but that's what I strive for. And if I can do that, then I don't even have to be right maybe 40% of the time and still be profitable. In this case, I could have been right, I don't know, 30% of the time. And because I had that 2-to-1 ratio, it'd still work. So that's pretty cool. And, the program, I am only doing one contract per target in this here. Now, I also do trade, so I do different ones as I'm trading. You can see we end up starting off weak in the month and then ended up finishing very strong. I don't know what happened there. Oh, that's what happened. Too many zeros. All right. Anyway, yeah, and everything's tracked. This is based on one contract per target as a simulated, and the ratios and the rate of returns are based on the overnight margins, not the intraday margins. So using intraday margins, obviously, it would be a little bit different. You can see that using a full margin overnight, it would have been about $50,000 account to be able to accomplish that, and it was a 13% rate of return, hypothetically. Okay, again, this is hypothetical simulated account, but there are live trades that I do, obviously, from this as well. And people do follow this with live trades as well. Anyway, I digress. I wanted to get into talking about our subject today, our topic, and actually, I'm using a couple different things to help me out with that. I got a lot of different programs. And where is, oh, I was viewing something. Hold on. Close that out. This is what I wanted to get to right here is my charting. And it doesn't matter which particular chart we look at, except Forex. Forex doesn't really have volume on it, does it? Now, could you see volume on Forex? Yes. The problem is when you look at volume on Forex, that volume is for one particular broker only. And when you look at the volume coming from stocks, futures, options, that's all coming from one centralized exchange. If it's a NASDAQ stock, it's coming from the NASDAQ exchange. If it's an option, it might be coming from the CBOE or the clearing options clearing council, OCC. If it's futures, that data, that volume data comes from the CME, Chicago Mercantile Exchange. But Forex there's no exchange. It's a different animal. So when you go in and you type in this case, I'm using Euro, Yen, and I'm using Oanda as the broker, that's only giving me the volume for this particular security with that particular brokerage, Oanda. So if I go EUR, was it JPY, and I go to Forex, you'll see I have choices. I could use FXCM, Oanda, Capital.com or Capital.com, and so on. So if I go to FXCM, the volume might be similar, but it will not be exact because it's from that specific broker. That being said, it all still works very similar. Okay. And one thing you got to realize, actually, I'll go to, let's say, SPY, or no, we'll go QQQ. That's the ETF that tracks the NASDAQ. So QQQ, there we are. And I should say more specifically, tracks the NASDAQ 100. Now, the great question that I had yesterday, and this is something that a lot of people misunderstand, is what about this color? You know, if I see red, a lot of people immediately think, oh, that's selling volume. And they see green and they think, well, no, that's buying volume. No, 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 no. The volume that is reported, it's the number of shares, contracts, or lots exchanged. That's it. That's all volume is. It's the actual number of shares, contracts, or lots, if it's Forex, that were exchanged. No, it's too small. And when you think about it, every single exchange has to have a buyer and a seller. You can't have one without the other, right? Cannot have one without the other. So if you see 100 in volume, that means that 100 were bought and 100 were sold by however many people it took to make that exchange, right? So just because I see green, you know, for instance, we're moving down, 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 and we have this big green candle or bar in volume and a decent sized candle as well. You can't automatically say, well, that's buying pressure. That's a lot of buying that's going in. No, because every single one of those had to have a seller match that buyer. So volume is just volume. It's actually neutral. So what makes it biased is the price action that accompanies the volume. Okay. And here's a great example of it. When you take a look at this candle right here, notice there's also a lot of volume there, isn't it? And you might think, okay, it's red, so that's a lot of selling pressure, a lot of selling volume. No, it's not. Again, the volume's equal. It's got to be. As a matter of fact, let's see exactly what it is. I'll go to data window here and back to that candle. The volume there is 55 million shares traded on that particular day. Well, again, 55 million shares were transacted. Volume is neutral. Okay, volume is neutral. Now, one of the things I said is that there is buying pressure or selling pressure. And that's reflected in the movement of price. I'll show you exactly what I mean. So volume itself is neutral. It's neither bullish nor bearish because it has to be equal. You got to have buyers matching up with the sellers. You can have one without the other, right? So what would I consider the pressure to be? Well, that's something different, okay? So yes, high volume can also mean something. Low volume can also mean something, which we're going to get into. But first, we have to realize that in understanding price movement, there's really 4 things you need to learn. And before I go any further, I want to take a step back and just show you, if you are interested, like I said, in joining me in the E-mini think tank, you can actually try it out for free if you want. We do a 2-week free trial if you do quarterly subscriptions. So, you know, you saw that link that Andrew put up there earlier. And if you do monthly, you just pay monthly if you want to. If you decide to do the quarterly subscription, then I'll show you. If I click on that link, it'll pop up another page here. Or register for E-mini think tank. Monthly, $3.99, quarterly, $9.95, but there's a 2-week free trial. We don't charge you for the first 2 weeks either. So if you want to try it out, you get full access to everything for the 2 weeks for absolutely nothing, including all the lessons I'm about to show you. So if I go into my member section, anyway, kind of click too fast. That's what it was, the sign up thing, like I said. And if you go in on the quarterly, yep, I think it's already clicked on quarterly. There it is. 0 for the first 2 weeks. We don't charge you until after those 2 weeks. And you get full access, like I said. You know, it's a good program. I think you'll like it. So, you know, if I go to the E-mini think tank, I'll show you what happens. like I said, you'll get emails where you can log in, or if you're not able to go live, you can watch the recordings of the classes. See, it's already up from yesterday. And in addition to that, you get all the trading information sent to you. Plus, right here, bonus videos, educational videos. We do Q&A sessions as well, but there's also, how to find trends, how to identify where to buy and sell, things like that. And in addition to the recordings, there's also documents that go along with it, kind of guiding you. And that's what I do is I put together education, and it's self-paced education. I'm actually re-recording all of the videos, every single one of these I'm re-recording in a professional environment, professional studio that I'm setting up here. And basically, it's going to be complete education on trading, which is pretty cool. So where was it going here with the volume? Up the wrong page was on this one right here. As I was saying before, one of the things that I teach, and I was actually going over this last night as well, is that in order to read price, you have to kind of learn several things. Am I in a log cabin? Yes, I am. I actually am in a log cabin. Yes. This was built probably 120 years ago. That's where I live. The outside is modern. It's sided up. Now Lucy's going in the door. Okay, Lucy, you going outside? Sorry. All right, go ahead. Go. Oh, there's an Amazon truck outside delivering something for my wife. But yeah, I live in a log cabin that built 120 years ago in the woods in Virginia. I'm not far from DC though. So I got all the, like I said, Amazon's outside delivering right now. So that's why the dogs are barking. But anyway, I digress. Ooh, squirrel. Anyway, hopefully the air conditioning, I don't know if you see it, the little white thing right here. Hopefully that's not too noisy. If it is, I can turn it off. But it's anyway. Getting back to reading price, there's 4 things you really need to learn: color, shape, size, and location. Well, this recording, this will be shared. It'll be available. We have a YouTube channel that we post the Trading Coaches Corners on. So absolutely. And the recordings, if you enroll the previous recordings with all the education, of course, that's available to you, especially if you do the 2-week free trial. The location is supply and demand. Okay. And that supply and demand is kind of key to how I trade. So right here, where is it? Trading routine and finding zones. That's the lesson on how to find the zones properly. And if you go to fundamentals, there's also there it is. Oh no, it's 24. Wrong one. Leg-based zoning technique, which is going to be updated as well. Okay. So anyway, location, supply and demand. That's how I find where to buy and where to sell. Now with color, I'm not going to go too much in detail to these because it's something that I have in detail in the classes, but color is basically telling us if there's a trend, one should dominate, right? You should see a lot of green candles in a bullish trend, a lot of red candles in a bearish trend. If you're getting mixed colors, then it's not a strong trend. Size, again, that's kind of important as well. And that is the height of the candles. Okay. So if you're looking for the location, just go to YouTube and type in Wealth Builders HQ. Right there. And actually, I'm not subscribed for some reason. There I am. Now I am. But if you go into Wealth Builders HQ right there, you can see Trading Coaches Playbook. And there's a lot of different ones that'll be uploaded. So you can go into the videos or whatever it is. But just type in YouTube. There we go. wealthbuildershq.com. And there you go, Tej. That's actually my ex-wife's name. Anyway, I digress. So getting back to reading price, height of the candles, that also tells us a lot about it. But now I was talking about buying or selling pressure and how that actually influences things. Oh, it's also a Wealth Builders HQ TV. Thank you. Appreciate that. Yeah. Okay. So you might want to post that out to everybody so they can get that link as well. So shape is showing basically where the close is versus the high and low. And that's kind of what I'm pointing out on this candle. So, a lot of people would look at this candle and see the volume and say, oh, it's red. Okay, so that's about just selling pressure. No, it's not. Okay, the volume is neutral. But what tells us if there's buying or selling pressure is the shape of the candle. And again, if I enlarge this more, take this off. So we can actually manipulate this a little more. There we go. You take a look at that candle and you can see the close on a red candle. Actually, I'm going to use a different arrow because this is the high, right? The close of a red candle is the bottom of the body. So in this case, the close, again, is at the bottom of that body right there. And that is indicating where the bulls and bears finished up the battle. Okay. So we have the high. Whoops. That's what I want to do. Here. I'll match the colors, I guess. So we got the high right there. Got the close. Then we have the low. And remember, I said it's based on that where we are closing in relationship to high and low that matters and influences the pressure. Oops. So there you go. And basically what happens is any price action between the low and the close that's buying pressure. Okay, so any price action you have between the low and the close represents buying pressure. When you think about it, we couldn't close at the low. Why? Because there was a bunch of buyers who wanted to get in, but there were no sellers. And what happened were that in order to buy, you need a seller. So the buyers had to attract the sellers by raising their prices up. So that buying pressure was stronger. See, what happens with buying and selling pressure, it's not about the volume, it's about who is more aggressive. Were the buyers aggressive and willing to raise the amount they're paying, or were the sellers aggressive and willing to drop the amount they're willing to sell for? That's what creates that buying and selling pressure. So conversely, any price action between the high and the close, that's going to be selling pressure. I might as well change the color of that too to match, like I said. There we go. And that's on any kind of candle, any security. So when you see this moving down, 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 and there's heavy volume there, that's not because there's a huge amount of sellers that are going to keep pushing prices down. No, we were left with a big bottom tail. That's buying pressure. So we see that in that volume coming in, but it's actually buying volume. Well, again, it's not even buying volume, it's neutral volume, but it's buying pressure that's stronger than the selling pressure. And that's why prices moved to the upside. It continued on the next candle, continued to push to the upside. Now, why do we pause? Notice we lost buying pressure, didn't we? On this candle, we're closing in the middle, right? Kind of keeping the notes here. So in this case, we closed between the high and the low, kind of in the middle. That means that buying and selling pressure were matched up and the volume was quite low. So honestly, there wasn't a lot of trading going on. It's almost like when I take this pen, toss it in the air. Inertia takes it up, but eventually inertia and gravity become equal and the prices or pen stops. That's what's happening on the screen. We were moving up. We lost the bullish inertia. The bears were just as powerful. We were equal. And the next candle There's the low. Again, close pretty much in the middle there. But the high is a little further away, isn't it? We're closer to the low than we are to the high. What does that mean? Selling pressure is building up. And we're getting a little more volume behind it now, too. So the volume can help us with identifying a little bit of strength of a move, perhaps, but the pressure itself has nothing to do with the color. The color just matches the color of the candle. What's really important is where do we close in relationship to the high and the low? And that tells us if we're bullish or bearish. Oh, hold on. What do you want, Lucy? You want to come in? Come on. Come on in, Lucy. Okay. Good girl. All right. My dog does not like to be around without me. She's very dependent. Just went in her house. Good girl. All right. Sorry. I love my dogs and they love me. So anyway, yeah, the pressure is the key thing there. And you can see we stalled out in price. Why? Because we lost the buying pressure. Well, buying pressure is picking up. Buying pressure is picking up. Now, when you see a large spike in volume, that can mean something. Even though it's not the pressure, okay, the amount of volume can add to what you're seeing in the charts. Okay, and those other things I was talking about, the color, shape, size, location. Again, I'm not going to go over all those right now. I'm just focusing more on volume. But if you have very low volume, it's a lack of interest. And that often that leads to a trend change or a price change. Or the other is true very often. When volume increases, when price decreases, vice versa, does that hint at a pivot? That's what I was going to get to, Brian. Great question. Absolutely. When you have high volume, that can also mean something. And really, it's not just high volume, but volume increasing can tell you the trend is strong. So let's put it that way. Higher or increasing volume is a sign of trend strength. But think about this. In order for prices to continue in a trend, let's say it's in a downtrend, like Brian was suggesting, if volume is increasing while prices are going down, is that a good thing? Does that mean that we're going to continue or is it going to be a pivot? Well, in order for prices to keep going down, you have to have two things. One, you have to have a lack of buyers, because if there's a lot of buyers, the buyers will come in and sell to the, buy from the sellers, and we wouldn't go anywhere. They would transact right away. Prices are decreasing because there's a lack of buying pressure. And in order to sell, the sellers are being aggressive and lowering the amount they're willing to sell, right? Additionally, we have to still have sellers. If there's nobody willing to sell, prices will not keep going down. So the thing that I usually tell my students often is that prices move further and faster with the least amount of people on board. Think about it. Once everybody who wants to buy or everybody wants to sell has done so, there's nothing to keep prices moving. It's done, right? So if you get a steady increase in volume, yes, eventually it will be a pivot, but that pivot will usually happen at a location known as supply or demand. It doesn't just automatically happen in the middle of nowhere. If you get a pause in price like this, we had that indecision and selling pressure I mentioned. If we are not at a supply zone, then that's probably just a pause and prices will continue. But if you see that the volume is increasing and then all of a sudden we're starting to change direction, it's probably because we hit a prior supply or demand zone. You know, looking back at this particular area, there's no supply right there, right? I think we're at all-time highs at that point. That was June, yeah. So not the best example, but I can go to another chart and show it. So you come across there's 50% less volume, but prices go up more than normal. Yeah, that can happen. Absolutely. Again, it's because of the imbalance. And you can see where that imbalance is if you know what to look for. Now, one of the key signs of a pivot is actually going to be capitulation. Capitulation is extremely high volume in the trend. Remember, once everybody jumps on board, there's nobody that's going to continue pushing prices in one direction or the other. Capitulation is usually a sign of reversal. This was actually capitulation. And again, it was bullish pressure, right? We were moving down, down, down. And what happened? Look how high that volume is compared to all the other volume bars around it. It's ridiculously high, isn't it? That's capitulation and usually leads to a trend change. Well, I'm not going into details of supply or demand, but that was a demand zone. That's the origin of a buying pressure imbalance. So we had the capitulation right at demand where it should reverse. So let's go to a different time frame or different. I'll just go to a different time frame. Let's go to 15-minute. Okay, here we are. And looking at what's going on. Actually, let's go back a little bit here. There we go. It's random time and date, middle of August here. Okay. So what are we seeing? Well, beginning of the day and end of the day, you're going to get spikes in volume. But again, notice prices are moving in an upward direction here, right? And the volume jumps. That's the second highest volume for the day. This was the beginning of the day right here. Okay. That's usually one of the highest volume bars. But now we got another big spike in volume as we were trying to break out. And that may be, well, there's still buying pressure, but that may be the end of this move because everybody wanted to buy may have just done so. We should have had a gradual increase, steady increases in volume, or like this, staying stable. The trend typically continues. Notice right here, though, what happened to the volume? We had been moving steady and increasing. Now we get red, which is a sign of bearishness or selling pressure. And not only that, we started losing volume, didn't we? And the trend followed. And by the way, that can happen in a downtrend as well. If you get steady volume, maybe even slightly increasing, that's a sign of a good, healthy trend. But if you get a spike like this, or a change in volume, that can be a sign that the trend is getting weak and maybe changing. And look at this, from that spike in volume, what happened? We stopped going up. We started pausing. Now we have another spike in volume. Oh, can't show it like that, can I? No. And let me increase, but notice how the volume jumped again? It's not twice as high, but it's still high. That could be the end of this downward pullback before we continue to push up. And there it goes. Look at that. Once again, jump in volume compared to the ones around it. Okay, that's the third highest volume candle of the day. Volume candle number 1, 2, and 3. And what do you think is likely to happen when you get a big spike in volume? You stop moving in that direction, at least for a little bit. It's just a small pause. Now we're getting a gradual increase in volume and prices are continuing the trend. Is this the end of a day? Not yet. We're not quite there. Now we got a large candle, a little bit of a jump in volume. I think everybody who wanted to buy might have just done so. That could be the end of the upward move or thereabouts. And look at that. We start going a bit sideways until the end of the day. That's the very end of the day. Right there. Oh, that's the next day. This was the very end. And even that, large candle in the same direction we're already moving, capitulation, we're likely to see a turn in price coming soon. Well, it went a little higher before it happened, but we eventually made a new low. So volume can give you a lot of clues like that, but you got to be able to read it the right way. If I go to what's happening now, phone, can't answer that right now. It's okay. Sorry. Bear with me just a moment here. It's been a busy morning. Anyway, there we go. Never ends. Where was I here? Oh yeah, looking at today. Just starting off this morning. It's good to see my tweet was correct. If you're not following me on Twitter, you can. I'm at Trader BDub. That's on X. Sorry, not formerly Twitter. Anyway, I said this morning that even though we had a little bit of bullishness pre-market, we were probably going to see the sell-off start as soon as the bell rang. And we did. Anyway, so this is the beginning of the day right here. Okay, 9:30 a.m. That's this morning. And we're getting very high volume, which is, again, typical for the first candle of the day. You can see this was yesterday. Very high volume and a start of a move to the upside after a gap down. Well, here we did gap down, but we continue to move down. High volume, we'll see if it continues. If the high volume continues, the trend is less likely to continue. If the volume drops off and we see that it starts to steadily increase afterwards, the trend's likely to continue. Now, that's what you want to see. Steady increase in volume or staying stable. If you get a drop in volume or a spike in volume, then you're in trouble with the trend. That's it. Simple. And what happened? Dropped off a little bit in volume. Overall remained somewhat stable. And let's see, whoops, sorry. Notice there's that bottom tail. A little bit of bottom tail here, but no bottom tails on these other three candles, right? That means there's no buying pressure if there's no bottom tail. It's all selling pressure. But here we see buying pressure creeping in. And if you were to measure it out, the distance between the high and the low and the close, so basically the distance between the low and the close, high and the close, are about equal. And that means we have indecision. We might have a pause in price. We also dropped off in volume. So again, a lack of interest in the price moving in a direction. Here's your pause. Now, what kind of pressure do we see? We have a lot more volume that came in. And again, people misread this. They think green candle, green volume, it must be buying pressure. No. The buying volume is neutral. It's not buying, it's neutral. But this green candle is bearish. Why is it bearish? Anybody know? I gave you the answer. Why is that green candle actually a bearish candle, not bullish? As I take a sip. You guys got it. Yeah. Stephanie and Brenda, you got it. Kevin, yeah. Selling pressure's there because the topping tail indicates that we closed away from the highs. You only do that because there's a lack of buying pressure and it's a bearish candle. Technically, that is not a shooting star. No offense, but there's names given to a lot of these candle formations. That is actually an inverted hammer. And a shooting star would be if it were at a top and actually has to gap away and then gap back down. I had to learn all these formations. They don't mean much. Honestly, if you don't know the names of the candles, you just know color, shape, size, location, you're going to be fine. But yeah, shooting stars technically are gapping up away from price action, then gapping back down. But it is the same kind of formation, upside down hammer or an inverted hammer. So you're close, yeah. Anyway, that's the selling pressure candle because, like you said, big topping tail, selling pressure, right? And look at that. We continue to make a new low. Hey, more selling pressure, still going down. Oh, now we're getting a lack of momentum, right? We have very small candle and we have a lack of volume. So we're probably going into a pausing point. How do we know if this is the end of the move or not? We look back. By taking a look back, kind of pulling our heads out and getting proper perspective, are we at demand? And looking back at price, oh, shoot, I didn't mean to do, oh, well, that's fine, I can fix that. Looking back, we can see that, well, demand a little further back or a little further below, we have kind of drop base rally right there. We did turn here, but that's not really a good demand zone. This may be a little suspect as well. I would also look to see not the 15-minute, but the bigger time frame where our demand is, because that'll really tell us where the trend's changing. But getting to today, where are we? Not too far. Here we go. There we are. So we're not quite at the demand zone yet. And because we had light volume and we still have plenty of selling pressure, that buying pressure is not equal yet. We still have more room between the high and the close compared to the low and the close. We're probably not done going down. We're just in a pausing point. Well, what time is it? I mean, it's lunchtime in New York right now, right? I just finished my pizza. So yeah, 12:44. This is lunchtime. This is the lunchtime doldrums. Normally, volume will drop off between about 11:30 to about 2 p.m. And you'll see it almost every day, right around 11:45, sometimes a little earlier, till about 2 p.m. Every once in a while, you get spikes early, but usually around 2:30, the volume starts picking up again. And look at what's happening. We're just going sideways right now, just as I suspected. Notice the color is mixed, red and green. Why? We're just moving sideways. But because we're not currently at demand, and if we go to a higher time frame, 60-minute, we're definitely not at demand yet. We probably will not turn here. 4-hour? Nope, we have no business turning right here. We won't turn until a little bit lower, probably around 440, 437. That's where the demand is. So this is just telling us right now we're in a pause because of the time of day and the lack of volume. So that's a little bit about volume. Another thing that I really like about volume is actually trading using volume. And I don't know if I could do that here with share bars. No, this just does minutes. Let me see. That's why I opened up some of my other programs. So there's different ways of looking at charts. Right now, the chart that I'm viewing is based on time. Okay, this is time-based. And basically, as time goes by, even if there's not a single trade that occurs, you have to show the time moving with a new candle. And that's okay. These can be used. These give us lots of good data. They're very usable for trading. But there are two other ways of viewing price, actually multiple other ways, but two other main ways. And one is not a time-based chart, but it's based on trades. And a trade-based chart is called a tick chart. Basically, every time a trade goes that means that is one tick. So one trade is one tick. So anytime there's a trade that occurs, a tick goes by and you get recordings on the chart. It has nothing to do with time. So compare this, and I'm on QQQ, and I'll go to my Thinkorswim right here. And again, I'll go QQQ. But instead of a 15-minute chart, I will go to tick chart. And let's say I do, I don't know, 512 ticks. That means every time there's 512 trades that occur, there will be a new candle. Notice the time at the bottom. It is not symmetrical, is it? At all. Sometimes there's a lot of candles. Sometimes there's not a lot. Why? Because there's not a lot of activity this time. Remember, we're in the doldrums. We're not moving a whole lot. There's not a lot of volume being traded, not a lot of trades being accumulated. Let's see, do I have, yeah, there it is, time and sales, right there. There's the price. These are all the trades that are occurring, and those are the number of contracts being traded, or sorry, shares being traded. You can see, if you were to go back to early this morning, no, it won't let me go back that far, but if you were to go back to early this morning, you'll see a lot more activity than you would in the afternoon. Bear with me. There we go. Okay. See it fix something. All right. So this is one other way of looking at charts. It's not time-based. It's based on number of trades occurring. And that's fine. It's your personal preference how you want to do it. I am okay with these, but they're not my favorite, to be honest with you. My favorite is to use what are called volume-based charts. Because these are trade-based charts. If you use volume-based, those are called share bar charts or volume charts. And basically, the chart is the number of shares or contracts or lots traded. Once you get that minimum number being transacted, it could happen in one transaction. It could happen in 100 transactions. Doesn't matter. Not time-based. It's based on the number of contracts or shares being exchanged. That's volume. Instead of seeing the bars on the bottom, it's incorporated in the charts. I like that a little bit better. And that's why I opened up my TradeStation, because on TradeStation, you actually chart that way. Again, I'll go to QQQ. And on time frame, I could go to minutes like we were doing before, 15-minute chart. Let me get rid of some of these indicators because I don't remember what that is. And change it now. Actually, I'll just type it in. Let's say 500 shares. And it's loading it up. And there we are. Notice once again, the bottom time is not symmetrical. And it's kind of weird. It's just going sideways. There's no price change, even though there were 500 shares being traded on the Qs. And I can adjust this too. If I go into customize, you'll see I actually have pretty good choices here. I can do tick, and tick based on trade count or tick count, or volume based on the actual volume. Let's do 5,000. Actually, 15,000. That might be a little closer to 15-minute chart. I don't know. We'll see. There we go. Not quite. But again, if you were to go early in the morning, it's not even going back that far because I only went back 500, didn't I? Bear with me. Hang on. I need to fix that too. And you go back. Let's go 2 days. Take a moment to load. But what I like about this is now you really get to see the imbalance. Tick charts and volume charts work really well to show you the imbalance between buying and selling pressure. Because remember, the size of the candle tells you how much that pressure is. Small, small pressure. Large, large pressure, right? And take a look at these candles this morning. There are so many more candles early in the morning than there are right now because we're in the lunchtime doldrums, right? But watch what happens when you look at this. Remember, every single one of these candles only gets created. I'm trying to go to the beginning of the morning here. Where are we? 9:30. Every candle gets created when there has been 15,000 contracts traded, or shares, excuse me, we're on shares on Qs. Okay, so why do we care? Well, take a look at something like this. So zoom in a little more, okay? Remember, every single candle, same volume. Right here, we started off going nowhere. Out of basically, what time was that? About 9:30 and 45 seconds. We started getting a large range candle. Every single one of those was the same amount of volume. Right here, to basically fill 15,000 shares, prices didn't have to go anywhere because the buyers and sellers are pretty equal. They traded right at that same price. Why was this candle created so large? In order to fill 15,000 contracts or shares, there were no sellers nearby. The buyers had to be aggressive and raise their prices to get those shares. That is the origin of an imbalance. And if it meets a certain criteria for the pattern, that could be a demand zone going forward, meaning an imbalance where demand is stronger than supply and a better opportunity if you want to buy, because you're likely to buy with leftover orders from the institutions. They're the ones that push price, period. And I'm glad you like the webinar. Absolutely. Yeah, it's a little different the way I look at price and volume. Notice here, we still moved up. And the amount of candles got a little faster than it had been before. So here we have 2 candles covering a lot of price action. And that was only 30,000 shares. Well, now 1, 2, 3, 4 right in a row. There's a lot of volume right in here. And we didn't go anywhere. We started going sideways and dipping down. All of a sudden, that is the origin of the imbalance to the downside. So initially, we had an order imbalance. So I'm going to bring this up. Hopefully I fixed this right. Let's see. It did. Good. Okay. Perfect. Right here, this is an area where prices were kind of basing sideways and rallied up. That's the origin of the imbalance. That might be demand going forward. It also is going to be dependent on the trends as well. There's more to this, but this one, that is definitely the origin of selling pressure and supply. So looking here, prices stopped going up, they based a little bit, and we started a big imbalance where there's no buyers, but lots of sellers. Anybody who wanted to sell there, especially if they're big institutions, probably didn't get all their orders filled. Those orders will still be there if we come back to that price level. And I know this for a fact because I actually used to do this for a living. I worked as a hedge fund trader, and I also worked as what they call agency desk operator, where I actually had to get orders filled for the brokerage. So you do what's called working the order. Okay. Yeah, we're trading a little bit of volume, but mostly price. Absolutely. Absolutely. Great question. So basically, yeah, we're trading mostly price action, but using volume to help identify where there's big gaps. That big red candle is a gap where there's imbalance. There's not a lot of buyers there. Unless something changes fundamentally with the market, we're likely to see prices drop from there again because once again, there's no buyers. So let's see what happens as we go forward. Well, you can see we overshot this area a little bit, although maybe I drew it wrong. Probably should use these wicks too. And remember what I said, that's the origin of imbalance where there's buyers but no sellers. We stopped going down. It's predictable. Probably more importantly is going to be this supply zone going forward. Let's see. Yeah, it seems like we can get lower, but we couldn't go higher. As a matter of fact, we couldn't even get up to anywhere past the wick of that green candle. That's where we tested. Remember, this area right here, that's the origin of lots of selling pressure. How do I know? Large red candle, same volume as all the rest, but in order to fill all 15,000 of those shares, the sellers had to drop their prices aggressively to find buyers. And that becomes where you want to buy and sell in the future. So yeah, I can use volume, and especially volume candles like this. Once again, we're moving down. Yeah, down, 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 down. Dominance of red changing now. We have a little bit bigger. I mean, it's not as extreme as some of these candles were, right? But looking at this green candle compared to the other ones around, that's pretty big. And it's the start of that imbalance that led to a big bullish move. So when we come back to that area, we're likely to see prices bounce from there. What happens? Yeah, we just slowed actually. It did stall, but eventually went through. And maybe because it wasn't as big as some of these others. And you could do this pretty much on any time frame. So I did what, 15,000? Let's do 150,000. Go back. Download all the data. Let's see, I'm just going back to a random time and date. There we go. No, why does it keep doing this? Only goes back a couple days. Oh, well. But you can see the same thing over and over and over again. And this could be for, you can do it on like longer term. Right here, we have rally. We're moving up, started basing sideways. And there's the origin of that selling pressure. Very big imbalance. That becomes supply. And sure enough, halted prices, held prices, and eventually broke. And that's partially because the trend was bullish. That's why we broke to the upside. Well, if we come back, same thing. We could see that there are areas drop, base, there's the origin of imbalance that took us to new highs. Even below that, oops, wanted to copy that, sorry. Right there. Might be a little bit right here, although not as powerful. I'm looking for those candles that are much bigger than the ones around it and the origin of imbalance. So if prices come back to those areas, unless the trend changes, we should get bounces there. And there it is. Look at that. First time back to that area. And I probably could have used the wick too. But look at that. We're bouncing. Why? That was the origin of imbalance. There was a lot of buyers there. Okay. You can't do volume charts on TradingView. That's why I switched over. On TradingView, you can do time base or tick, which is trades. Remember, but you can't do volume here. I can only do it on my trade station. And even Thinkorswim only does the ticks, unfortunately. But did I get disconnected? Uh-oh. Hopefully I didn't lose internet here. There it is back. Okay, good. Weird. Should bring my chart back in a moment here, hopefully. And come on. So waiting for data. But yeah, unfortunately, you just don't have it on certain platforms. So like I said, Thinkorswim, I had to use the tick charts or time-based. But when I can, I actually do like the volume-based, but they're just only available on certain platforms. I keep getting disconnected here on TradeStation for some reason. My internet connection's fine. I'm wired. So I don't know. Figure it out later. Yes. So let's see. We're about out of time, actually. I got to get going. Like I said, this will be shown again. Yeah, you can't get volume on TOS. That's what I was saying. TOS only does the tick charts, not share bar volume charts. So, oh, you can't get volume on SPX. That's because it's an index. It's not tradable. You cannot get volume on indexes. You can only get it on tradable securities. So you'd have to get it on SPY or QQQ. See, with QQQ, I can see the volume. And if I bring it in as an indicator, but yeah, if I go, oops, this is killing me. I'm just going to close out TradeStation. It keeps going on and off. Anyway, but yeah, you can't see it on anything that's not tradable. So here, volume, QQQ, no problem. But NDX, no volume because it's an index, it's not tradable. That's all. Yeah. So it won't show it. That's all. But yeah, that's why. And the same thing with the Forex. You know, if you were to look at a Forex chart, Euro USD, you have to put the hyphen in, or not hyphen, line. That also may not show you volume because technically, if it does show you volume, it's only volume for the brokerage that you're working with. And you see, it doesn't even show it in this one. Forex symbols. Yeah. So that's it. Anyway, I have several different classes that I teach. The main one that I'm active in 3 days a week is the E-mini think tank, as I mentioned. So if you're learning, I want to learn about futures trading, that's where you probably want to go. And really, a lot of stuff that we do in the futures trading applies to pretty much anything. I don't really trade a whole lot of individual stocks. I prefer to look at the broader market and do the futures, the index futures or other futures contracts. So at the E-mini think tank, there's also a website you can go to, BrandonWendell.com, which has that information too. And I do a couple other programs. One is called the Wealth with Spreads, which is a little more advanced trading on futures. It's called spread trading. So again, it's BrandonWendell.com, just my name. And yeah, they have the Wealth with Spreads program right there talking about that. And then the E-mini think tank, that's actually my mom and Larry Holmes. He was a heavyweight boxer and he's my mom's neighbor. So we happened to be at a restaurant, saw him and said hi. Anyway, but yeah, the E-mini think tank is the one that I do quite often, 3 days a week. And I showed you the logins for that. I also have another one where I do some options trading, and that one's called the SPX Cash Flow Secrets. But yeah, basically, if you want to learn most about what we were just talking about when it comes to volume and all those things, you want to get involved in the E-mini think tank. That's where we have most of the education for that. So I want to thank everybody for being here for the Trading Coaches Playbook. And if you have any questions about any of that, anything I went over, contact us. Support@wealthbuildershq.com. Great way to get a hold of me or anybody here to get more questions answered. And I hope to see you again soon. And until next time, trade safe, trade well, everyone. Take care.